Okay, so let's jump into the strategy. Now, in essence, there are two main strategies in property. You've got your for sale, which is on the left, and you've got your for rent, which is on the right. Your for sale is essentially buy and sell. You buy it, you hold it maybe for 6, 12 months, then you sell it. You're in and out of the deal relatively quickly. Your buy to rent, or what we sometimes call the buy to hold, is exactly that. You buy it, hold it for 1, 2, 5, 10, 15 years, depending on how the deal is structured. So if you think about it in that way, there's two main strategies: buy and sell, buy and rent. Now, under buy and sell, which is often referred to as your cash strategies, that's the insider jargon, if you will. Now, there are two key strategies here that you need to be aware of. One is sourcing, and the other one is flipping. Remember, it is anything related to earning pots of cash from a transaction. It's a short-term, high-profit strategy. So let's look first of all at sourcing. Now, you can see this picture is basically an estate agent showing around first-time buyers. The idea of sourcing is a similar concept, except instead of being an estate agent, you're an investor's agent. And you're not showing first-time buyers, you're showing investors around a property investment. So let me show you an example. This was one of the deals that I've recently sourced. It's in an area in Johannesburg South, in Rosettenville. It's a block of flats. That's the picture of the property on the right-hand side. Now, the asking price of this property is 3.5 million. It's a block of 10 flats, so that's basically 350,000 Rand per flat, and they are all 2-bedroom flats. Okay, so I went in, I spoke to the estate agent, I was able to negotiate a purchase price of 2.8 million. So I was able to reduce the asking price from 3.5 to 2.8, which means I reduced what the person was willing to sell the property for by 20%, right? Then there were other deal costs associated, 400,000 Rand worth of deal costs, things like your transfer fees, your bond registration fees, some renovation costs, etc. Right? Then I charged a sourcing fee of 80,000 Rand. So basically what that means is I went in, found the deal, negotiated a good price with the estate agent, calculated the cost, made sure that it was a sound financial investment. I then went to a few investors and said, who wants to buy this deal from me? You know, so it's, you can kind of see that you're almost like an estate agent, except you're not working with first-time buyers. You're working with investors. Now, I must just put a caveat in that to earn a commission off a property transaction means you have to be registered with the Estate Agents Affairs Board. If you're not registered and you're earning a commission off a transaction, you know, that's illegal. So what I've done is I've partnered with my estate agent in Rosettenville. He's got the NQF4 and he's got a principal estate agent that he reports to, and I share my commission with them. So I introduce investors to their business. The investor then pays them a fee for the work they've done, and then I get a commission off that. So that's a way in which you can structure it. The monthly profit that this person will get from this deal is 35,000. It's a return on investment of 18%. So the key with sourcing is you have to find a financially viable deal and then sell it to an investor for a fee. So what's great about this is you don't have to buy the property, you don't have to raise the funds. All you have to do is you have to risk your time finding a good deal, finding an investor, and bringing those two together. So essentially what sourcing is bringing a hungry buyer and a distressed seller together, and you make a commission off the sale. You need to secure the deal with an offer to purchase. So once you find a seller who's willing to sell at a discount, sign an offer to purchase with them to secure that deal at that price. Then you need to sign a contract with the investor for the sourcing fee. So you first sign an OTP with the seller, secure the deal. Then you sign another agreement with the investor, which says that once I introduce you to the seller, I get paid a fee. And then you can bring the seller and the buyer together. There's no capital required from your side, which is great. But there is a risk in terms of your time and trust, right? Your time might be wasted because you might have to find 100 deals before one makes sense. And also trust. Unfortunately, even though you sign a legal agreement with the investor, they might not pay you your sourcing fee. That is the risk that you do take, unfortunately. Okay, so that's sourcing. That's a great way in which you can get started in property. Requires no capital, a little bit of time, and some risks, but ultimately, if you can find a good investment and you can sell it to an investor, you can walk away with a piece of the commission, which is a great starting point for a lot of first-time investors. The next strategy is flipping, or what we sometimes call the BRS, which is buy, renovate, and sell. Now, the best way to show you this strategy is to just use an example of two students of mine that have gone through an extensive coaching program and have now done their first flip. So these are the two students, David and Jess Homer. They found a property, an apartment in Joburg Central in the area called Kalani. The asking price was 1.65. They bought it at 1.4. They then had legal costs, refurb and selling costs. The market value was 2.4 and the profit 407,000. I see here quickly that there's a question from Mohammed who wants to know how you can reduce the price. So if you don't mind, Mohammed, I'm going to just answer that question at the end of the session. But please, guys, post your questions, and then at the end of the session, I'll answer all of them as need be. Okay, so back to David and Jess. They've, as you can see there on the refurb cost, they invested a lot of money into renovating this property. So this is a great strategy. If you can find a rundown, dilapidated house, you can buy it at a discount, force the value of the property to go up by renovating it, by adding value to the property, and then you can sell it for a premium price. You see here, they sold it for 2.4, but they bought it for 1.6. They forced the value of the property to go up by renovating the property. So let's have a look at what they did. On the left is the before, on the right is the after. And well, they started with really the finishings, right? The lamp shades, they modernized it. They made it look a lot nicer. They repainted the house. You can see it used to be a dull white. Now they put like a nice charcoal background, which is great. They ripped out the floors and put some parquet flooring in there, which looks really, really nice. Same concept here. Changing the light fittings, repainting, and then changing the flooring. This is not something that anybody can't do. This is quite a simple renovation with a decent builder and a decent project manager. Most people can do this. The kitchen, this is where they did a little bit more work. You can see here on the left that there used to be a wall. They broke open that wall and created an open plan kitchen. They put a really nice centerpiece there in the middle, and then they updated the cupboards, and they just, modernized it, because your kitchen and your bathroom is where the greatest value in a property lies. Bathroom, so they redid the bath, they changed the structure a little bit, they updated the cupboards, and again, just making it look fresh and making it look professional. That, ladies and gentlemen, is a great example of the buy low, renovate, sell high. And that is in the jargon of property investors, that's called a flip. You're in and out of the deal 3, 6, 12 months, and you make a lump sum of profit, like David and Jess, who made 400,000 Rand profit off this transaction. Now let's go to the passive strategies, or the cash flow strategies. This is where you're buying and you're holding. The three deals, though, or the three strategies I want to show you are the buy-to-let, multi-let, student accommodation. And the key with the buy and hold strategy is you need to be making money on a regular monthly basis. So it's anything related to earning a recurring income from a transaction, then you've got the buy and hold strategy. So buy-to-let, very simple. You buy a house, you put one tenant in, and hopefully it makes you some money. So here's the first buy-to-let that I ever did. The asking price was 850. I bought it for 645. I hope you're starting to see the trend. You're always having to buy a discount. That's why one of our rules in property investing is you make your money when you buy. If you can buy at a discount, you take away the risk of property investing. The rental on this deal is 10,000 Rand per month. Bond repayments are 5,400, levies, rates and taxes. And I'm walking away with a monthly passive income of just over 1,500 Rand. Now, what's great about this is that every single month, this is coming into my bank account. After all expenses, I'm making 1,500 Rand, meaning I'm becoming 1,500 Rand richer every month. Now, that might not seem very exciting, because that's not really financial freedom, but how many of these do you need to become financially free? For some people, it might be 10 of these properties. You might be 10 properties away from financial freedom, or you might be, 100 properties, depending on what your income requirements are. Now, the buy-to-let is a great starting point for investors, but as you can see from this deal, is it's not great for generating high levels of cash flow. You're not going to make a lot of money from buy-to-lets. That's where multi-lets have come in. So I just want to move this because it's bugging me a little bit. I don't know if you guys can see it, but there's a little message here. Okay, so now the multi-let is where you start making substantial amounts of cash flow. And a multi-let is similar to a buy-to-let, except you've got multiple tenants. You've got multiple people living in the property. So here's an example of a multi-let in an area called Rosettenville. Now, multi-lets tend to work in lower income areas. Okay, so let me show you an example. This is a 14-bedroom flat in Rosettenville. The asking price, as you can see on the bottom left there, is 1.8 million. I was able to negotiate a price of 1.35. So that is a nice big cha-ching, because remember, in property, you make your money when you buy. You've got to buy at a discount. And this was what the estate agent gave me as information. It's a block of 7 flats. Flat 1 is a ground floor unit going for 3,000. Then there are 2 3-bedroom flats, and then the remaining 5 units are 2-bedroom flats. This asset is generating a total rental income of 27,545 per month. So let's go through the monthly cash flow statement, right? You've got your monthly rental, the income coming in every month is 27,500. I've got a bond, rates and taxes, insurance, management fee, maintenance costs. All of these are costs associated to this property. The monthly profit, so after all expenses, I'm walking away with just over 7,800 Rand per month, which is a 32% return on the money I put in. Now, this is where people start getting excited, because how many of these do you need to be financially free? You know, you might need, I don't know, you might need 5, you might need 3. Now, that's not really the point. The point is not getting financial freedom quickly. The point is getting a passive income stream that lessens the burden and the stress that you feel on a day-to-day basis. You know, you want to be able to maybe have 1 or 2 of these assets that gives you the confidence to go to your boss and say, listen, I can't work Wednesday afternoon because my kids are playing sports. And then your boss might say, well, and then I can't pay you for Wednesday, and you'll be able to say, well, that's okay, I can take the hit because I've got other income streams. You're not now completely reliant on one person for your income and for your source of survivability. That's why I love property. It's not about getting rich quickly. That's never going to happen. But what it is doing is providing you a sustainable path to creating generational wealth. So multi-let is a great example and a great way in which you can generate high levels of cash flow. Another example of a multi-let is student accommodation, right? Multiple students in one house is seen as a multi-let. Now, student accommodation is one of the hot topics in property investing today, and the reason is because of the demand. You know, the current shortage is estimated at around 300,000 beds short. You know, so basically the government has said that we need investors to step into this and to start fulfilling this demand, because we've got thousands and thousands of students all over South Africa that are desperate for accommodation. I'm currently in Bloemfontein with one of my partners, and he's been showing me around his student accommodation flats. He currently controls around 250 beds, and he told me that by September of 2019, he already had his entire 250 beds booked up for 2020. So that kind of shows you the demand that, you know, by September of the year, the following year's full student accommodation requirements were fulfilled, and there were still thousands and thousands of students that needed a space. So that's why I think student accommodation is a really exciting space. So let's go through another example. This is a sale of a house in Brixton. It's going for 1.4 million, 6-bedroom house. The purchase price here was 1.3. Rental of 26,000. There were 9 students in this property, so I think it's about 2.5 per bed. Bond repayments, rates and taxes, all of your monthly expenses, and you're left with another monthly cash flow of 4,800. What you will notice here is I've put a line item there that says vacancies. Now, vacancies, I'm not going to give you the answer now, but does anybody know why there is a vacancy cost in student accommodation? So if you do know, just post your answers on the chat. I'm going to ask Apollo just to highlight those, and then at the end of the workshop, at the end of the webinar, we'll see who was right about the vacancy. So this is just a little teaser for me. I just want to see if you guys can think outside the box. Why would you need to have a vacancy provision for student accommodation? Okay. Now, here's a very interesting graph that's going to tell you what the biggest risk in student accommodation is. Right now, what you're seeing here is the split or the distribution of monthly expenses. You can see your rates and taxes in terms of your monthly expenses is sitting at about 11% of your expense. Your insurance is 5%, water and electricity is 32 and 39, and utilities is 13%. Now, what I'm hoping to show you here is that your biggest risk is in your variable costs, and your variable costs are water and electricity. Some months you're going to have students who don't use a lot of electricity or don't use a lot of water, which means your cash flow is going to be quite high because your expenses are reduced. But in some months, the colder winter months, some students might have a heater in their room, and they might keep that heater on for extensive periods of the day to be warm. That means that your electrical bill is going to go higher. So you've got to be sure that you can manage those two variables, your water and electricity, to make sure that you're not going above and beyond what your deal can withstand. The best advice I have for you is make sure that you've got prepaid electricity, and if you can afford it, prepaid water, which means that before a student can use water or electricity, they have to pay upfront for it. Great way in which you can manage your student accommodation. Now, ladies and gentlemen, that was some of the theory that we went through. I'm sure I went quite quickly through it. We will be making this recording available to you afterwards, so you're welcome to go and listen to it again. What I wanted to do is I wanted to analyze 4 deals with you in under 4 minutes. And the point of this is to show you some practical real-world experiences of how you can analyze a buy-to-let, multi-let, student accommodation, and flip, and also how you can use My Property app to make your investment journey just that much easier. Okay, so what I'm going to do is I'm going to jump to My Property app. If you don't know My Property app, this is a tool that helps you analyze deals, and it's pretty much an online calculator, which is something that that's really beneficial for those of you starting out. So I'm just going to quickly log in to My Property app, and I'm going to go to this new feature that we have, which is the AI analysis. AI analysis stands for Artificial Intelligence Analysis Tool. Essentially, what this part of the app does is it calculates the deal for you. So we've got some really clever intelligence behind the app, and it analyzes everything from beginning to end so that you know if this is a good deal or not. Okay, so let's start here. I've identified a few properties that I think could work. So here is the first one. It is a 2-bedroom apartment in KwaZulu-Natal, Phoenix, in an area called Rockford. Okay, so the asking price here is $340,000. It's a 2-bedroom apartment. It's cash buyers only, so that's telling me that there's a bit of a risk. That might mean that this property is not insured, or that it's got a bad tenant in it or something. You only put your cash buyers only if this property can't be bonded for whatever reason. Okay, so let's have a look here at the pictures. Yeah, it looks quite nice, looks clean. Looks like it doesn't require that much renovation. It actually looks relatively decent. Okay, so we've got more or less all the information we need here. Now we're going to go back to the app. Okay, I'm going to call this one Phoenix. Okay, the value of this property is 340. That's what the estate agent's asking for. I don't think we can pay 340. Remember, we always got to get a discount. So let's say that we can get 290. We can get the person to 290. Now I know that area, the rental you could probably get is about 5,500. Cool. So those are the first bits of information. Then we've got to put the loan to value. Now, loan to value is essentially how much the bank is willing to loan you on this property. Let's assume they're going to give you a 90% loan to value. So they're going to give you 90% of the cash. You got to put 10% deposit down. Okay, the strategy is buy to let. The number of tenants is 1. The deal risk, I would say the risk is relatively medium just because of the area. The refurb required is definitely low. That's all you have to put in. And we'll click run analysis. And the app essentially creates and runs the numbers for you to determine if this is a good deal or not, which is quite exciting. So the deal, the app will tell you what all your costs are. Your buying costs, so there's a cost associated to buying a property, right? You've got to pay bond registration costs and transfer fees. So for this deal, you're going to be charged 30,000 Rand. The refurb, we're estimating about 7,200. That's just a lick of paint, maybe changing a few tiles. Holding costs, selling costs, other costs. Your total cost of this deal, other than buying the property, will sit at about 68,000. Okay. Now here's the key one. Cash flow ROI, your cash flow return on investment. This is telling you how good a deal this is, right? You're going to be making about 1,286 Rand per month profit after you've expended all of your monthly expenses, being your bond, your levies, your rates, and your taxes, and the return on investment that you're getting is just under 16%. Right? That's fantastic. You got to compare that to what you're getting at the bank. So if the bank is charging you or giving you maybe a 6 or 7% interest rate for leaving your money with them, this deal is giving you 16%, which means your money is working 2.5 times harder in this deal than it would be if you left it in the bank. What this app also does, which is fantastic, is it tells you what your exit would be. Now, an exit strategy is very important in property investing because what if you plan to rent this property out, but it doesn't rent? You know, you try and rent it for 3, 6, 12 months and there's no tenants. What you got to then do is you got to try and exit the deal. And you might exit by trying to flip the property, you know, renovate it, make it look a little bit nicer, and then sell it for a profit. And what this app is telling you is that your exit is you're going to probably lose 18,000 Rand, which is okay, right? I mean, oftentimes you're going to find that your exit is not going to be positive, but your main strategy will be positive. And then the app also goes into a lot of detail to show you what your projections would be over 20 years, what the cash flow, income, and expenses will be, your equity gains, and your return on equity. And I know this seems a little bit confusing. There are lots of tutorials to show you all of the detail. The key thing here is your return on investment. You want to make a decision based on that field. Okay, so that was one. Let's now add another one. Let's go and look at another deal. So let's look at maybe a flip. Let's look at a flip first. So this is in an area called Kempton Park, which is in Gauteng. What you can see here is that the property is not in great condition, right? And this is where the flip works well, because the flip only works when there's a lot of value that you can add. As you can see here, the walls are a little bit dirty. They definitely need to repaint. The door needs a little bit of fixing. You know, the kitchen, it might be functional, but it's definitely outdated. You might want to rip that out, put in new cupboards, make it look fresh and modern. The bedroom also repaint. You can look at that carpet. That carpet is very old. It needs to be ripped out and replaced. So there's definite opportunity for growth here. You can definitely improve this property, and that's the key for a flip. So the asking price is 350. It's a 2-bedroom in Kempton Park. Okay, so I'm going to call this one Kempton Park. The resale value, so what they're asking is 350,000. Well, sorry, no, what the resale value is. Now, when you're looking at a flip, the resale value is what you think you can sell it for in a period of time once you force the value of the property to go up. So let's imagine that we're going to put 50,000 Rand of capital into this deal to renovate it, put in a new kitchen, new bathroom, new tiles, repaint the whole property. We can then fetch 450,000 Rand from this property. Okay, so that's what we can resell it for. What we're going to buy it for is obviously at a discount. So we're going to buy it for maybe, should we go for a 20% discount? So if the market price or the asking price here is 350, we're going to go in with an offer of 280. Okay, the rental you can get in this area is 6,000. Loan to value, we're going to go for 80% loan to value. We're going to do a buy to flip strategy, 1 tenant. It's going to be a medium risk and also medium renovations, right? We're going to have to put a bit of renovations into this deal. Fantastic. So what this is telling us here, again, we've got our deal costs on the right here. You can see our refurbishment estimate would be 42,000 Rand. The return on investment on the flip. So here you can see the profit that you will get on this deal, assuming your numbers are correct, is 41,751 Rand, which is a 22% return on investment. Fantastic. What's also great about this deal is that even if you can't sell, you've got a positive cash flow. Your cash flow, which is your monthly profit, is 2,700. That's an 18% return on investment. I'll tell you honestly, this is very rare. To find a deal that makes both sense from a flip and a cash flow point of view is very rare. But what you can see here is that this deal makes enough financial sense for me to go and do some more due diligence. Okay, let's look at another one. So I've got here a multi-let. So let me just go here to add a new one. Now this multi-let is in Rosettenville, asking price of 1.8, 8 bedrooms, 8 bathrooms. Okay, offering you each apartment. Okay, so there's 1 bedroom, 1 bathroom, and here we go. Okay, so current net rental is at 27,000 per month, and there is a 10% increase expected in April. Prepaid electricity and water, that's fantastic. I really, really like that. Let's just have a look at some pictures. So that's on the outside. What I always look for is I look at these properties to see if they are currently being lived in. As you can see, this unit's definitely being lived in, which means there are tenants already in this property. So you won't have to go through the cost of finding your own tenants. Okay. Not the way I would have designed my bathroom, but it doesn't look too bad. It actually looks in pretty decent condition. You can see that this has been, recently renovated. Looks clean, looks professional. Might be a little bit of work required there. Okay, but it looks quite decent. Okay, so we have enough information. We're going to call this one Rosettenville. The resale value, what they're asking for is 1,799,123. We're not going to buy it for that price. Remember, we always got to get a discount, so we might go in with an offer of 1.45. Rental of 27,000 Rand. Loan to value 70%, because the banks don't usually loan higher than that. Multi-let with how many tenants? 8 tenants. I'm going to call it a medium risk, medium renovation, run analysis. Okay, so we see here that our cash flow, our monthly profit after all expenses will be 1,756. That's only a return of investment of 2.5%. Right, that's not a good sign. That basically is telling us that this deal doesn't make enough financial sense for us to move forward with. And the exit isn't good. I mean, the exit's sitting at minus 60,000. So if you can't get a tenant or you're sick and tired of running this property as a rental and you try and sell it, you're probably going to lose 60,000 Rand in total. Now, this is where this long-term projection comes in play, because what you can see here is you can see how the deal will do over a 5, 10, 15-year period. And what you can see here is in year 1, your return on investment is 2%, but by year 5, it's 5.5%. So that's also not a very good indication. So ultimately, this deal does not make enough financial sense to move forward on, which is also a good thing, right? You want to know which deals do I invest more time in doing my due diligence, and which deals should I, move on from. Fantastic. Let's do one more. A student accommodation property in Bloemfontein. Okay, so asking price 1.575, 8-bedroom house in Universitas. It's 8 bedrooms, one of a kind with a 5-year lease. Okay, let's have a look at some pictures. Okay, there's a nice big garden space. Okay, so this is definitely student accommodation. You can see a very big kitchen. There's a common room there. This is the common room. That could be a bedroom. That could be another bedroom. Okay, I'm seeing the 8 bedrooms. I'm seeing a lot of potential for student accommodation here. It's in the right area. It's close to the university. It seems to make a lot of sense. Okay, so add new name. We're going to call this one, should we call it Universitas? Can't spell it. Okay, they're asking 1,575,123. We're not going to buy it there, right? We're going to buy it at a discount. We're going to buy it 1.2 million, for example. Now the rental, what we need to do is just whip out our calculator here quickly. Okay, so there is 8 bedrooms. From my experience, you could probably get about 11 students in there, just because of the size of these rooms. So you're looking at 11 students with probably an average of about 3.5 per bed. Okay, that's definitely an average. Some of the rooms might have an ensuite bathroom. Obviously, this is where you need to go and view the property and make sure that you're pulling the relevant TPN reports and speaking to the relevant estate agents to get your due diligence correctly. But let's just say, for example, an argument's sake, it's 38,000. Okay, so we're going to put in here 38,500. Loan to value at 70%. A student accommodation with 11 tenants. The deal risk is low. The renovation will be medium because you'll have to repurpose this property quite substantially to get it ready. Run AI analysis. Okay, cash flow of 10,000 Rand after all costs. Return on investment of 16%. Fantastic. For me, anything above 10 to 12% for a return on investment, I'm happy with that. You can see that your exit is pretty good. If you had to exit out of this deal, you might lose about 10,000 Rand, but that's a small price to pay for a very lucrative upside. So on the surface, this deal for me makes a lot of sense. You've got high costs here. You've got to remember that. 383,000, 144,000 Rand in terms of renovation estimates. You've got some holding costs, some selling costs. It's definitely a deal that seems to make financial sense over a long period of time. So yeah, I mean, I think that was a bit longer than 4 minutes, but I was just hopefully showing you that the power of the app that we've created is that it helps you analyze deals within a few minutes, so that you can really understand an investment. Now, what you would normally do is, once, let's say that you've figured out that this specific property makes financial sense, the next step is to go to our detailed calculators. So I'm going to go through to our more detailed buy-to-let calculator. I'm going to add a new deal, and I'm actually going to run the numbers of this deal in more detail. So let's do a little bit of a detailed analysis on this property, because I like it. I think this one's got a lot of potential. Okay, so it's a commercial. So the asking price here is 1,575. If you want to have more information regarding this detailed analysis, you can just go here to our tutorials tab. Go to tutorials, you will see videos on buying to flip, buying to sell, student accommodation. We've done a whole bunch of tutorial videos. Let me just show you here, so you can see how to analyze a buy-to-let, buy-to-flip, how to analyze an area, etc. We've also got a whole bunch of property educational videos here, how to analyze a student deal in 30 minutes, property investing tools. There's a whole lot of stuff here. We want to make sure that property is something that doesn't scare you or intimidate you, because you've got the right knowledge. Our offer price. Okay, we're going to go in with a nice little discount. We've worked out our rental at 38,500. Okay, so that's step one. Step number two, buying costs. Okay, now buying costs, I'm just going to assume it's about 35,000 and 20,000. You can use this app called Uber, which is loading over here. Uber is a transfer calculator, if you like. So if you're purchasing the property for 1.2 million, your loan is 1.1 million, for example. You're buying as a freehold, the seller's not registered for VAT, and you're buying it in a company. Calculate. It'll tell you what your total transfer costs are. I'm hoping the internet's still working. Why is it not registering? Sorry, ladies and gentlemen. This is usually a very functioning website, but I'm not sure what's going on there. But anyway, we've got our buying costs there. Okay, refurb, we've estimated that we're going to put about 20,000 Rand into the kitchen, 50 into the bathroom, 15 into tiling, 15,000 into repainting, another 10,000 into flooring. The electrical, let's say 8,000, because we need to put in some prepaid meters, and another 5,000 in terms of plumbing, and maybe a 20% contingency factor. Okay, so that's our refurb costs. Some other costs, maybe evictions, planning, holding costs. We'll probably need to put some holding costs in place while we finish the renovations. Finance costs, 70%. Okay, cash flow. Right, so we're going to put a void cost here of 12%. Remember, we have to put a vacancy cost with student accommodation. I'm still hoping to hear who's got the answer to that one. 10% management fee and an 8% maintenance fee, plus about 8,000 Rand in terms of, not 8,000, 6,000 Rand in terms of your water, your electricity. So I'm running through this really, really quickly, but what I'm hopefully showing you here is that once you've done the quick analysis, the artificial intelligence, it's told you it's a good deal, then you jump to our detailed calculator and you run the numbers on a detailed basis, because then when you get to the summary tab, you can see here exactly what your return on investment is going to be, what your debt ratio, what your MO ratio is going to be. You can see what your different scenarios are going to look like. You're going to see what your indicators are looking like. You're going to see your equity gains. You're going to see all the information that's relevant to you making a proper buying decision. And the great thing is you can just click here, generate proposal. It takes you to this page where you can say generate simplified proposal. Okay, some of the headings are required. Sorry. You say generate simplified proposal. And within a minute or so, you will have here a page, a document, which you can take to a professional investor with your logo and with all your information. And here, the deal's number, the number of the deals. You can take this now to an investor and say, here's my property investment. Please, will you either loan me the money, or do you want to buy this property from me, or do you want to partner so that we can flip this property together? So that, ladies and gentlemen, I'm hoping you see the value proposition of what the app can hopefully do for you. Okay, so let's just jump back to the slides. I'm almost done, and then I will be answering questions. I've got a quick disclaimer. The artificial intelligence tool that we are working, that I've just shown you now, it's still in beta testing, so it's not 100% accurate. I am working on improving it, so please don't make a buying decision on that calculator. Once you've used the AI tool and it says, yes, this is a good deal, then go and use the detailed analysis tool to make sure you've got your accurate numbers, and then you can make a buying decision. And also make sure that you're always using a detailed calculator. Now, let me have a look here at your answers. Okay. So the question was, why do we have a 12 or 15% vacancy provision for student accommodation? Now I can see here that Leon said that students are only there for 10 months out of 12 months, okay? Odette, vacancies, periods with no tenants, 100%. Desiree said, for in case there is no occupation of the property at some time, 100%. And Vaughan, caters for students dropout and varsity vacations. Okay, so all of those answers are correct. What I am going to say is Leon is the most correct. Students only rent 10 months out of 12 months. So students are renting from, February until mid-Jan to mid-November. They don't usually rent in December and January because they're on holiday, which means that you're not getting rent during December and January, which is 16% of the year. So that means 16% of the year you're getting zero income. That's why we use a vacancy provision of 12 to 15 to 16 to 20%, because you've got to make sure that you're working out what the students are actually going to pay versus not pay during those holiday seasons. So Leon, congratulations, that is 100% correct. So the next steps for the app is to start partnering with these two tools, which is Lightstone and TPN. They have all the data of all property transactions happening in South Africa. And basically, my dream is that once you just put the address of a property into the app, it will then spit out, is it a good deal or not? So once I have gotten these two third-party providers to give me enough data, I can then come back to you and say that the artificial intelligence app is 100% accurate and you can make a buying decision off it. So please be patient with us. We are constantly looking at improving and upskilling this app, but your feedback is 100% needed and necessary. I just want to also let you know that we are running a promotion today for our gold package, where you get access to the buy-to-let, buy-to-flip, multi-let, unlimited number of proposals, as well as the artificial intelligence calculator. It's usually going for around 1,123, but for today, we are giving you a 25% discount. So all you got to do is go to myapp.property.online, use the coupon code of CC 25%. There are only 50 seats available until the end of this month. So please, if this makes sense for you, go get yourself on it. Otherwise, here are some of our links. support@mypropertyapp.online. That is Gapolo's email address. He is, very capable of answering any question regarding property investing or the technical side of the app. Blog.mypropertyapp.online. That is our blog that we run on a weekly basis. We're adding content, we're adding educational tutorials, anything that you might need. If you're looking for coaching services or you want me to be your coach, you can go to Lawrence@Housebuyers and just send me an email. Fantastic. So I'm going to come back now, and I am just going to close my screen because I want to answer the questions that we have here. Okay. So let's see where the questions are. First of all, Muhammad asked, how did you manage to reduce the price? Okay. Great question, and this is a key aspect of property investing. The question is, how do you get a good discount? If you can get a good discount, you win the game in property, but how? The answer is you've got to find motivation. Okay, you've either got to target distressed sellers or distressed properties. A distressed seller is someone who is, for example, going through a divorce, maybe relocating. They're going through some sort of financial difficulties, they're downsizing. They need to have a reason why they're selling the property. If they have a strong reason for selling the property, they might be tempted to sell at a discount. That's not always the case, but there is a possibility. Another great option is going to auctions. Auctions is where a lot of motivated people go. The other side, so that's the stressed seller. The other side is distressed property. That is where you find a property that's completely run down. It is depressed, it is burnt, dilapidated, the windows are broken, the garden is overgrown, most first-time buyers are going to run away from that property. That's where you can maybe get a discount. So the key to finding and reducing a price is making sure that you've find someone with motivation. Okay, Ian, if you are earning 1,500 Rand profit per month from your buy-to-let, do you put money a certain percentage away for tax purposes? So Ian, that's a very, very good question. How the taxes work in South Africa is that of your monthly rental, you can deduct your expenses. So things like your rates and taxes, your levies, any maintenance costs, etc. And you can also deduct the interest of your bond repayment. Now, remember, when you pay a bond back to the bank, you pay a capital portion and you pay an interest portion. In the beginning of you paying back this loan, the interest portion is very high, the capital portion is low. But over time, the capital portion becomes higher as you pay your bond off. Now, what you can do is you can take that interest payment off of your income. You can deduct it, and then whatever you're left with from a profit point of view, that is what you're going to pay taxes on. My recommendation is put this all into a company. A company gets charged 28% tax on any profit, and then you're going to get paid 28% as opposed to getting charged in your personal name. But also, Ian, go check out on the app. We've got tutorials about some of the tax benefits. So go and check that out, and let me know if you've got any further questions. Okay, next we've got Sanjay. Please share some of the strategies to negotiate a lower price. What will make your offer be accepted or stand out? Sanjay, the best advice that I can give you is go to an estate agent or to a seller with a guaranteed offer. Now, what I mean by that is you either got to have cash in the bank or you got to have a pre-approved bond application from the bank. Okay, so you either go to the seller and say, I want to buy your house, and I'm going to buy it cash, which means that I can push this property transaction quickly. We can transfer the property and complete the deal within a month. That's very attractive for someone who's motivated, who wants to relocate, or whatever it may be. Or make sure that you go to the bank, show them your salary, ask them, what am I pre-approved for? Maybe you pre-approved for 500,000 Rand, which means you can go to a property that's selling for 500,000 Rand, show them your document and say, hey, I'm a serious buyer. So the biggest strategy that I have is make sure that you've got a guaranteed offer. Also, go check out our working with people tutorial on the app. We talk about how you can work with distressed buyers, distressed sellers, how you can work with investors, how you can negotiate those good asking prices. Guys, these are really, really good questions. Okay, Nyameka, I hope I said that right. Nyameka asked, buy-to-let apartment. Why does a conveyancer transferring the property charge the buyer for pro rata rate share of the levy before the property is transferred to the buyer? I'm not quite sure I understand your question. Nyameka, do you want to maybe send me a email at lawrence@housebuyers.coza, maybe just a little bit more detail, and then I can answer that question for you. And then Tando, after signing an offer to purchase with the seller, how is the process of passing the deal to the investor? Okay, that's a great question. After signing the offer to purchase with the seller, what is the process of passing the deal onto the investor? So the key here is you first got to sign an agreement with the investor. And in that agreement, you have to be very specific in terms of what the total amount of the sourcing fee will be. So, i.e., how much are you charging the investor for this deal? And number two, when must that payment be made? Now, that's very important, guys, because is the payment going to be made once they sign the offer to purchase, once the guarantees have been put in place, once the property has transferred, once the property has completed and lodged? There's different stages in which a property transaction goes through. That's why when you buy a property, it takes 3 to 4 months for it to actually transfer into your name. You have to be very, very careful and clever with the investor in terms of when are you going to get paid. So for me, that's the key for you, Tando, is sign the offer to purchase with the seller. Make sure that you've got a suspensive condition in that offer to purchase that says this offer is only valid for 2 weeks and it is subject to me getting an investor on board. You want to make sure that you can get out of the deal as well. Then once you've secured that offer to purchase, go to an investor, sign a sourcing agreement which states how much you're going to get paid and by when. Remember, you are working on trust. If the investor doesn't pay you, yes, you can take them to court and you can try and fight a legal battle, but I can tell you that the legal fees are going to be way more and not worth it for you to go forward with. Okay, so that's just the risk, right? There's a risk to doing that specific strategy. Okay, Sanjay, thank you. I have used the strategy, the cash strategy, and it does work well, which is great. What is your view on the 13.6 Act for buying multiple properties for a reduced tax rate? So I'll be honest, Sanjay, I have heard about the 13.6 Act, but I haven't used it in my own business. So I don't want to give you advice that I haven't done myself. What I will do is I'll have a chat with actually, you know what? Why don't you just email me? I'm going to put my email address one more time here. Send me a private email, and what I'll do is I'll introduce you to my my accountant, who manages my tax and manages my companies, and also he's got great contacts with property specific lawyers. So send me an email, and I'll happily introduce you via email to them. Again, I just don't want to give you information that I'm not a specialist in. My speciality is in running the numbers, understanding your investment, but I partner with tax specialists, with accountants, and with property lawyers who understand the game a lot better than me. So unfortunately, we couldn't get Tando on. We'll definitely try again next time. But ladies and gentlemen, thank you so much for being a part of this awesome webinar. We really enjoy having you on from both my and Khopolo's side. Thank you again for taking the time to be on this webinar. If you have any further questions, pop me an email or get in contact with Khopolo. We're also very open to you guys recommending topics. You know, maybe you want to know about the legalities behind property investing, and I can get my attorney on the webinar to come and share some insights. So if there's something that you specifically want to know about property investing and getting involved in property, please send me an email, send Khopolo an email. We're here to try and teach you, to enable you, and to give you some support. So thank you, Leon. It was a pleasure, man. Reino, good to have you guys on. Sanjay, Sando, everybody, Andrew, guys, thanks so much for being on here. Desiree as well. Really appreciate it. And yeah, we'll catch you soon. Happy investing.